Welcome back. You're with us here on Opening Fire. Markets are up about 20 points or so. It's a largely lackluster kind of day, morning at least so far. Let's just put the top gainers on the Nifty up. Take a look at what's happening, what's moving and how much, and then we'll get our next guest in. JSPL is up 3%, Hindalco is up 3%, GAIL is up about 2.5%. So it's a mix actually. Sesa Sterlite 2%, Tata Motors is up 2%, Maruti is up a little bit, ACC nearly 1.8%, Ambuja Cement and Coal India is up 1.6%, 1.8% respectively. Wipro, Tata Steel, NMDC are some of the other names. Oberoi Realty, about 13% gains, 25 rupees. It's a little, I wouldn't say strange, but usually when real estate companies splurge on large plots of real estate for a lot of money, the market reaction isn't what you're seeing on Oberoi. But Oberoi is bought land from Tata Steel, 25 acres for about 1,100 crores in Borivali, near Mumbai. And it's the first big purchase since their IPO in 2010. So they've been extremely hesitant and cautious. They've gotten close to deals before, but they've backed out. But they've done this. And it's a thumbs up from the stock market at least. SAIL, Arvind Limited. Arvind had a decent day yesterday. I think was up about 4-5%. It's up again 4%. They've tied up with a foreign brand. Yes Bank is up about 4% as well. So banks are seeing a fair bit of activity. Certain banks, not all. Ashok Leyland is up 3.25%. Let's put up something like Shriram Transport, which was up meaningfully in yesterday's trade. The question which I think many are asking is a bottom for the CV cycle near? Let's get in some perspective on the matter. We've got Rupali Shanker, who's director at CRISIL Ratings. They rate a lot of commercial vehicle companies, and they put out a report recently, and they also hosted a conference call where the CV cycle is actually close to bottoming out. Rupali, good morning. Great to have you with us here. Prashant this side. So why do you believe that the cycle is bottoming out?
See, let me take a few minutes to just talk about what we are seeing and what is the outlook that we are looking at. Essentially, we have seen a lot of pain in the transport operator sector, as well as the NBFCs who finance commercial vehicles for transport operators. So clearly, we are seeing that transport operators are being hit by both lack of freight availability as well as very, very poor improvement in freight rates. This is reflecting in the portfolios of CV financiers, really the NBFCs, where we have seen a sharp increase in delinquencies to almost 4.6% in terms of GNPA, and a poor profitability performance where return on managed assets actually dropped by about 40 basis points for the current financial year. Now, really what we are really saying is that as the manufacturing sector overall, capacity utilization start to come back in 2014-15. Of course, this will be back-ended towards the second half. And as we see steady removal of policy bottlenecks in key sectors on which transport operators are dependent, we should see a stabilization year next year, which is FY15. And then we should start to see some signs of cash flows of transport operators, and hence the portfolio performance of NBFC start to stabilize, and improvement is something that we are looking at over a slightly longer period of time. So clearly 2015 could be a year of pressure easing off and some stabilization.
So second half of fiscal 15, Rupali, is that what you're saying?
That's what we are saying, yes. That is when the delinquency performance of non-banking companies which lend to commercial vehicle operators and transport operators will start to stabilize and slowly start coming down. And transport operators also, their cash flows and the utilization of their fleets should start to improve. But it is going to clearly take about 2 to 3 quarters from now.
Right. So credit costs will come down, right? That's an important reason why you were expecting improvement. But but there the debate is pretty wide open. I mean, will credit costs come down in the system generally? To what extent, at what pace? So it's also a call on interest rates, right?
See, in terms of credit costs, if you see the last cycle that we saw in 2008-9, credit cost reduction actually happened in 2009-10 fairly quickly and at a fairly fast pace, mainly because of the type of recovery that we saw, which was really a very sharp V-shaped recovery. This time we are seeing a slow U, and really economic recovery is going to come back in 14-15 in a slow and steady manner, which is why credit costs are going to fall. However, we are not expecting a substantial reduction. So in terms of overall profitability, this year it fell to 40 basis points. Next year we are expecting a recovery of about 20 basis points from here on. So return on assets should really improve by 20 basis points. Really, while there will be an improvement, it is going to take 3-4 quarters for credit costs to really come down substantially from here.
Rupali, thanks very much for that quick perspective. Thanks very much for joining in. Great to have you with us here. Rupali Shanker, Director at CRISIL Ratings, saying expect a slow bottoming out and eventual second half fiscal 15 recovery for the CV cycle, CV space. Let's just take that break. Dilip Bhatt is joining us on the other side with some specific stock names that you could bet on. We are back with Dilip on the other side, 66, 11, 20, 21, 22 points higher on the index. Take that break.